All right, what's up everybody? Welcome back to RoyalBluFX. In today's video, I'm going to reveal one of my oldest strategies that have made me thousands of dollars. So let's begin with this video. And we're very, very close to be releasing our new course, guys. You guys have been asking us on a countless basis, commenting and also writing me on private messages. We will be releasing it very, very soon. Just stay tuned. So without wasting any time, let's begin with this video. All right, guys. So as promised, I'm going to be introducing you one of my old strategies that have made me thousands of dollars, and I thought it was just a good time to release it, because I really want you guys to, see how, how I've been making money throughout my last 6 years that I've been trading. And now this strategy can be good for beginners, and it can also be good for traders that are also advanced. You can, change it obviously if you like. You can add to it whatever you want, but I'm going to show you the basics of how it works, and I can also go into sort of the advanced part of it as well. We're going to talk about pretty much the direction, pretty much fractals, pretty much the entries and all that good stuff. So let's begin here, and I'm going to quickly draw a graph. Okay, so to quickly explain how we do this is essentially to understand reaction points. Okay, so I just want to confirm to you, all of you guys, that I don't trade the strategy anymore, although it is profitable, it is good, and I think it's gonna make you guys some money if you follow this correctly. So the way this works is we have what's called supply and demand, obviously, but more importantly, reactions. Okay, they're called reaction zones or reaction points. So essentially, the way it works is when prices are going bearish, and you can see everyone, selling obviously, and when prices are going bullish, just like this, all right, we have what's called reaction points or reaction zones. Okay, so how this works is essentially whenever price is going bullish, we always want to refer to the left side, and we want to look at what the left side is doing, what the left side is saying. That means, right? So that means when there's buyers, there have to be sellers involved, right? So this is kind of like an exchange, right? So like if the sellers were selling, we would be buying when they're selling, right? So essentially the way it works like this: you would put your supply zone here, right? And you'd wait for prices to see if they respect the supply zone, right? If they do, then if something like this happened, right? They respected the supply zone. That means there was an interaction between the supply, with all the supply. Excuse me, with all the both of the sellers right here, right? So there was sellers here involved, and there was also sellers here involved, right? And then price then reversed. That means this is where the banks took action to reverse price. Normally, when prices are going bearish, you can see prices were going bearish at some point in time, but once prices hit this supply zone, it just reversed all of a sudden, right? This could be for countless of reasons. It could be because price is already at an all-time low in the discount or oversold, or just somehow magically sometimes prices just reverse, just because we can never predict or anticipate where the markets go 100% of the time, right? So having said that, right, your idea here, the idea here is for you to see where all the supply zones are, and then highlight pretty much all the supply zones like this, and wait for prices to react to them, right? And whether they react or don't react, it really all depends. So let me just explain, okay? Once supply here was respected, it was respected because other suppliers saw there's selling pressure happening here and another selling pressure happening here. So people just took the initiative to sell here because of them, right? Okay, so once price breaks that high, right, you can see that this supply zone here was not respected, right? Which means that the price just ran through, which means that what we're looking for here is we want price to come back to where it was, where prices flipped, right? So we call this a flip because it is the origin of where price started to reverse bullish, right? It's where the banks took the initiative to run price just like so, right? So what we would do is we would wait for prices to get back to this area, right? Because banks turn the market and went bullish from here. If it didn't respect this supply zone and it broke through it, which it did like this, right? But it respected this supply zone, we would take this supply zone and refer to price to the previous demand zone that was not mitigated, which was this one right here, right? And then we would see price to bounce from here and to continue bullish in the same direction, right? So same thing applies. When prices run, we buy here, we could hold it to the next high pretty much, right? To this high, right? For your first TP if you'd like. You can also go and hold the markets to the next supply zone because prices are going to where supply and demand is, and they're retesting these levels, right? Because the markets and or the banks understand that there are sellers in these areas. So when there are sellers in these areas, we want prices to exchange, to flip, to show us these reaction zones. So when prices are going bullish again, right, like this, people or traders are reacting to the supply zone just like this. So this is considered a reaction, right? Price goes up. This is a reaction. People are reacting to it. They're trying to sell. Price goes the other way, right? Takes everybody out, takes all the liquidity out just like this. Price comes to the next supply zone. More reaction. What happens? Price flips and continues bullish, right? Because we know that this is an impulsive bullish move and it's the trend that's running price bullish at this moment, right? So you can see that price will come back, right? We would wait for prices to get back to these demand zones, just like so. Now, it's not going to be a pretty picture all the time like this, where you see, say for example, you're not going to see where price comes back to a demand zone, right at the 90% mitigation sometimes, right? Sometimes it'll mitigate or look like what's called a break and retest right here. Something like this, right? It looks something like that, where break and retest levels comes, right? This is also considered a breaker block, right? So prices will come into the breaker and then run just like this. So this is why, other reasons why the breaker block works, and why other reasons why the break and retest strategy works so well, because of the scenario, because this candle ran up so far, right? And it created an imbalance. Right, imbalance. That means there was no structure involved in there, not visible structure that you and I can see on this given time frame. Which means the only reason why price is reacting here is because when you drop down to the lower time frames, you will then see that there is a small supply selling pressure that took place there and then ran. So when you scale down to your lower time frame, you would see that that's where the last supply took place after this break of structure, right? And so that's why price comes into this breaker block and or break and retest level and then takes price bullish, okay? So like I said, sometimes it doesn't come all the way to the to the 90%, right, retracement, right to the demand zone. Sometimes it comes to the 50 EQ, right, and then releases, okay? So it's all subjective, honestly, in terms of the way you see price. If there was structure given here, for example, let's just say it did this, right, and price ran, right, just like this, then came back, then we understand price is coming back to the demand zone, and there was no involvement of another last supply in here. There was no other sellers that were involved here, comparison to this supply zone, meaning that price. There was no sellers, right, involved. So that therefore, price has the ultimate, decision to come back down to the last demand zone, because this is where the last sell to buy happened. This is where the last suppliers were involved, right? So that means price will come back here to mitigate to then extend. But one thing I don't want you guys forget always here is the key. It's really the key moments. The idea behind why this works is because the left side is the supply zone, right? It's this reaction point. So your main objective is just to highlight the reaction points and see how they react. So if prices, break right through the supply zone, right? Obviously, there's no reaction points in here. So we would refer back to the previous demand zone, right, where the demand took place, right? That means this is where the last demand zone needs to get mitigated in order for price to run. And vice versa. Again, when we have this reaction now react, because it reacted to this supply and there were more suppliers that came in, price ran again, came back to this demand now, and released, right? So, and more importantly, another scenario here. When you see another supply zone, what happens, right? This will be the next demand zone for prices to run bullish, just like this, right? So the main key factor here is just to always look on the far left, right? So where there's, in order for you to project and or anticipate your trade, you have to see what the supplier is doing versus what the buyers are, okay? You don't want to be just blocking this whole area here and be blind to it. Essentially, let me see if I can find something dark. Let's black this out. Say, for example, like this. No, not the border. Let's go into here and darken this, right? So a lot of traders just typically see a line just like this. They just see, oh, price is running bullish, I must buy. But they don't know where to buy exactly, okay? All they're doing is you're just waiting. They're just speculating. Price from the break and retest, it could come back to the demand zone, right? Sometimes price goes far below the demand zone, just like this, right? And so forth and so on. So we have to obviously refer to price on the left in order to see where we need to be entering on the right, okay? So let's go into a live chart example and talk about this right now, okay? So let's talk about fractals, okay? Because this, in order to understand the way we trade again, you need to just understand the fractal part of the market. The fractals is essentially just whatever you see on the daily, right? Whatever you see on the daily, from these lows to these highs, right? Everything prints the same on every time frame. So you will just apply the same scenario that I just drew on the lower time frames. Okay, how does that work? So let's talk about this. So essentially, right here, let's just start from the daily right here. You can see here, since we're on the daily, we're going to drop down to the 30-minute. I don't know if I'm able to. Actually, wait a minute. This is not the replay. Let's delete. Let's do some replay here, and we're just going to show you some examples here. All right, here we go. All right, so let's look at this. Okay, what do we see here? We see clear and well that we have a supply zone, right? So you can see a lot of suppliers took action here. So there was supply here, there was more supply here. What does that mean? That means that we're anticipating for price to come in here into the demand to continue bullish, okay? Vice versa, you can go up here as well, right? So whoever bought here, right, ran into that supply, right? And right now, we don't have any evidence here where price reacted to. All we're seeing is, right? So whoever bought here, we don't know. We don't have a clue as to who bought there. But now we understand when people sold from here and sold here, right? You have to have two, right? Notice that I'm referring to the left side here, right? And then there's that reaction, right? So now we are anticipating for price to come in here for prices to continue bullish. So once we understand that, we know we're bullish here, we're not bearish, right? So that's done. Let's go down to the 4-hour now. Let's go and do the same exact thing, right? What we're going to do is apply all the supply and demand zones, right? So again, we're going to refer to the left side. This is the left side here, right? And this is the right side that went bullish. So let's do this. Let's go here and say, okay, here's our supply zone. That's one, right? We see another one there, right? And then we see another one here, okay? And then lastly, we see another one up here, all right? So this one's a little subjective. You can either say this, right? You can do from this low to this high candle, right? All right, so let's look and see what's happening here. So far, we can see, and let's go from right down here, all right, from the origin. So far, you can see where prices sold here, prices reversed, right? So they reacted from this supply zone, right? That was your high, that was your low. This is what we call the flip. The flip is the very first part of the market structure when it shifts to go bullish, right? So that was your high. This is considered a chalk. That would be your chalk right there. There's your sell to buy. That is your flip. You wait for price to get there, and then we wait for prices to run like this, right? So you would enter right here in order for prices to run, okay? But let's say you didn't enter there, right? Let's say you didn't enter. So what would we do in this case? Well, we would look at the next supply zone, because now you can see there were suppliers there, right? People that were interested to sell, they sold. Price broke above this high right now, what do we anticipate? We wait for prices to get back. But they're obviously going into, you can either do this, everything's subjective. You can do that to that order block or to the whole supply zone if you'd like so, right? Like just like so, right? Okay, so let me just reiterate here. Let me go back here. Okay, right there. And I'll just cut it off right here for a second. Okay, so now we want to see, okay, we have to ask ourselves, when price broke this high, where was the last sell? It was right here, sell to buy, right? So we would put a demand zone here waiting for prices to get back here, right? So far that's what I can see from the eyes that I can see right here. Now this is also, oh, hold on a second. There we go. All right, notice what happened, right? Prices sold, went up, came right back down to this demand zone, and then ran bullish, right? You could see that. So this would have been a first buy right here. That would have been a first buy, right? And you could TP here for the first TP, and you could do the second TP up there, for example, right? But this isn't about TPing. This is about showing you how the strategy works. So now what's happening is this demand is done. It's over with. We're going to look at this supply zone now and say, okay, there was a reaction. It was both. In fact, this is the funny part. It was this one was avoided. It ran right through, but it respected this supply. That means we're looking for a sell to buy, to come back in like this, and then to run. Okay, so we're looking for the reaction here. We're looking for prices to sell and then buy, right? Because right here, there was a sell that happened right there, and then prices are buying now. So we can look to continue price like this. Let's see how this works. Prices are still running bullish. All right, still running bullish, no problem. So again, we look at where the last selling pressure happened. Well, it was either this one here or the extreme, right? So watch this. Prices are going up. All right, so they're reacting to the next supply zone. All right, look at that. Okay, so it avoided this, right? It avoided this one. People are trying to buy there. No problem. Oh, okay. You could do this whole entire demand zone like this, or you can just do the 50, or excuse me, the wick right here. Let's see how this works here. Okay. All right. So good. Fine. Yeah, either way, right? So like I said, it's either this demand zone here, right, with this wick, because that was your last sell to buy in there. This one got rejected. No problem. Or you could have done this whole entire demand zone just like this, because this demand zone does account for this little small piece, right? This little supply in there, that little sell is within this whole demand zone. So this does work too. Okay, so this would have been your buy, obviously, right? Let's look over here. You can see right over here, right? There's your high, there's your low. Price sold and then bought. Where was the last supply zone, or the last sell? It happened here, right? You can see it was right here. There was your high or low, your high, your low, price ran, right? So it sold just like this, ran up, came back for the buy, right? So I'm hoping you guys understand that this is pretty much easy to see, right? Let's delete this though, and let's go back into the 15-minute maybe, and see if we can, let's turn off the sessions. This would not be needed. Something like this. Okay, so let's just say this, all right? We want to be buying. So here's your supply zone right there. All right, and we want to say, well, what happened here? Where was the last sell? The last sell that happened, okay, and let's actually apply. Before we go any further, we're going to apply all these supply zones, okay, because these are crucial to the reactions, okay, because this is where we're going to wait to look to continue and to continue price. If we don't catch it down here, we'll catch it here, here, or here, okay? So let's watch. Okay, so prices are coming down. The last reaction, oops, actually I could see it right there. There was another one right here. Didn't catch that one, but this whole entire area would be your demand zone right there. Okay. All right, so that was your first entry right there. And then let's look at this next supply zone here. There's another reaction in there. You can see right over here, right? So that was your other reaction, because that is a sell to buy, right? So that would be another buy right there. You can see that, boom. So we already had one buy here, okay? You could target the main high and just track price if you want based off of these supply zones, because each supply zone does give reactions, right? There's a reaction, right? More reactions, and we're just continue the order flow. So what you're really just doing here is you're trading the order flow, right? The order flow of price. There's your next entry there, right? Just like that. You can target the high just like that, right? So now we want to see, well, where's the next where's the next demand zone? It's right here, right? You can highlight this whole thing. We're going to see if price comes back to the reaction. If it doesn't, no sweat, right? That means price is overextended and it has already ran. Here's the next demand zone right here. Okay, so here's where we're looking for price to come back to, if they should ever come back to, right? Otherwise, we're going to refer back to the higher time frame to take advantage of the next move. This looks like it has already ran without us, and that's totally fine. Let me see. Let me play this quick and see if it's ever coming back here. Nope, not so far, not yet. Okay, this looks, yeah, this probably already ran without us. Okay, we can move back to the 4 hour. So let's go find another opportunity, right? So we're going to go on the 4 hour. You can also go on the daily, right? So the higher the time frame, the better, because you can see ahead of what price is going to do, where you can also target price, right? So here's a supply zone. We can clearly see that. So we'll mark that as supply, right? And the last break that ever happened was right here. Oh, there was actually another one right there. So we can go into the lower time frame, the 4 hour now, and see what happened and where the last supply was, because we'll be waiting for that exact area. And I believe it might have mitigated. Yep, it might have mitigated actually, because I was going too far. There was your last supply zone right here. Right there. So it didn't. Okay, let me just go back down and see if it did mitigate. No, it did not mitigate. It's just left unmitigated. So let's play this, right? So we could wait for price to get down here. Let's play it a little quicker and see if price gets back. Okay, it's playing with us a little bit. All right, let's pause it there. Let's go here. Nothing has happened yet. All right, let's play it again. All right, maybe I should go to the higher time frame to get some more data faster. Okay, so this did not work, and that's totally fine, right? So now we adapt to the structure. This is the last sell to buy, right? This supply reacted to the previous supply all the way here, so we know this is the next in line. That means we can look to highlight this demand zone, right? So what we're looking for here is your sell to buy. That means price is going to come back to this low to continue bullish. At least that's what we want. That's what we're expecting. But so far, oh, let me go back here. Let's go back to the daily and see, is there another supply zone that price is going to react to, so we can see for prices to reverse, right? We can trade the reversal if you feel the need to do so. So we'll do the same thing from the reversal point of view, right? So watch this. So now that price is still bullish, it's running, it's coming to the supply zone. All right, right there, we can wait for the reversal. And once it reverses, we can continue now look for the buyers to be reacting from, so we can start selling price bearish to get down to this demand, right? So let's see how this works. Okay, so far we have a chalk right there. You can see that. And do we have a reaction? Let's see. This is your demand zone, and there was a reaction. Let me show you where it is exactly. Right over here. So right here you can see there's your last buy to sell, right? You can highlight this whole area here. This is where you would want to sell price, right there. So you might be saying, yeah, well, you know, the wicks are above. Doesn't that mean you're swept out of liquidity? Sure, you can. You can also take your risk and put it at the high right there to protect your, stop loss. Obviously, this is where you would have your stop loss. Once you enter there, right now, it's all about the making of this, the magic of making of money here. Let's go here and let's just target this demand zone right here, right? Because that's where we're actually looking for prices to get to. So in this case, again, we do the same thing. We highlight this demand just like so, right? A bunch of liquidity. Here is more demand, right? So your job is to mark out all the supply and demand zones because they are a reaction of price, okay? So when we're selling, we're looking for the buyers, where all the buyers are, right? Because all the buyers have to fail. And in this case, we had price here, so we would wait for prices to get here, right? Let's go see if this works, right? So, okay, notice, hold on a second. It would be this, not high, right? That would be the sell first, the first sell. There we go, right? So we had the first sell right there. We'd still look to take this, hold it right there, right? And let's see about this next one here. So now you can sit in these two trades, right? And we're looking to target this next demand zone right here. So let's see if it plays out. All right, this one took us out, and that's okay. Maybe I should have had the risk a bit higher right at that high because that's your last sell to buy right there. So this would have been a better choice, but you know what? Let's just continue. All right, prices are going bearish. That's a good sign. So whether you did this, right, this was a too tight, right? That's your high right there. So this would have been a much more safer route to cover that high, right? Let's continue here. All right, let's target this demand for the first profit. You can also hop in on these right here. You can see that we had a last week demand, strong supply there. There's your last reaction now, right? So what does that mean? That means this, right? There's your buy to sell, right? Because it reacted, this demand reacted to this, right? And where's this demand, where's the last high? Where's the high from this demand? The high is right here. That means if prices come back, I'll be able to sure to sell it again, right? So let's continue from here. We also have another one right here, actually, we could take advantage of. Let's continue, see if this works. There we go. So that worked just fine as well. This one's a short one, so I would most likely just TP here and or maybe in here in the 50 and just be done with this one because it could push price bullish from here. So let's watch out for that. Okay, it didn't. So it ran right through. We could have held it right to this low right here. So just like that, guys, right? Just like that. Let's take this now because this is the next buy to run price bullish from here all the way up there. Let's see if this works. All right. Let's see. Okay. It's going up, but it went down. Let's see. Let's see if this works. Oops. Pause that for a second. All right. So this is the big one, right? This is the big kahuna right here. Let's see if this works. It's very. This one's very choppy, obviously. All right. Notice how everybody's trying to sell here, while we're saying this is a buy. This is a buyer's market. At least from that's what we're, we're following the rules and we're. Let's actually go on the 4 hour. Maybe it go faster. Okay, we're getting something. Let's go on the 4 hour just to kind of speed things up to show you guys